to have your company this Thursday, the 23rd day of October. My name's Jessica Amir, market strategist here with Moomoo. Let's get to the news of the day, the focus that you need to be across, and stocks to add to your watch list. As always, let's bring you across what is making waves in markets overnight. So the S&P 500 fell about 0.5%. The NASDAQ 100 lost the most out of the major indices that we really look at. But if we stretch it out even broader, the small cap index, the Russell 2000, which you may or may not care about on a day-to-day basis, that actually tumbled the most, 1.5%. So the broad Aussie share market today is expected to open slightly lower following Wall Street. Perhaps the Aussie share market, if the futures are correct, they are suggesting that the market will probably erase most of it this week's gain that we've made across Monday to Wednesday, but let's wait and see. So what do you need to know about what went so wrong in markets overnight to spoil sentiment? Well, two major elements are impacting markets right now. Firstly, we've got a bevy of weaker than expected company results. That's kind of spoiling sentiment. So investors, they're going, hey, I might want to take some profits off the table just in case the sour trend continues and in case markets fall. So specifically, we saw Netflix tumble. Again, their shares are down 10% on disappointing results. Tesla, their shares fell slightly after hours on disappointing overall quarterly results, not living up to sky-high bullish expectations. We'll cover more detail soon. And IBM shares, the third tech giant, that fell after hours, despite reporting rosy guidance figures and beating sales estimates. Texas Instruments, the last tech company off the block, falling on a disappointing outlook. Now, the second reason that markets are under pressure here, ladies and gents, is because geopolitical tension once again is rising. So what's happened overnight? Well, guess what? Just on the back of Trump 2 weeks ago saying the US would bring in export restrictions by the 1st of November on any and all critical software. We had Scott Bessent, who's that? Well, the US Treasury Secretary. He basically came out saying, wait for it, the US is probably going to announce a substantial new round of sanctions against Russia. So what did this do? Well, it basically put markets on the back foot, expecting, I guess, a potential upset. So this brings in the major consideration of the day, and that we've got potential warning signs rising of a potential market pullback. So here are the considerations. There's a couple key ingredients that I want you to note down, save this video, and remember that you should be watching these in case the market pulls back. This is also a potential warning sign for you to maybe potentially consider taking profits off the table over of stocks that you've got that have risen up considerably. Maybe you want to keep those profits, lock them aside for a rainy day just in case markets pull back. So the first thing that we need to remember is just a reminder. Remember, the stock market does really well. It does a little dance, moves higher when companies are upgrading their outlooks and companies are reporting rosy or better than expected results. So that's the first thing that we need for the market to rally. But now here we've got a gusto of, or I guess a bevy of disappointing results, and we're seeing bad reactions from tech companies. So this basically means the market music could slow down. So as we said, Tesla reported disappointing results, but this is really important because they're the first company that's valued over $1 trillion US, the first of the major Mag 7 tech companies that have reported, and their profit margins did not live up to expectations. So this is even though the company reported record numbers. They've sold a record amount of electric vehicles across the world, despite what you say about Elon Musk. He did deliver those goods, that's for certain. But the market did not like that that costs have jumped up 50% at Tesla. Costs are now up to $3.4 billion US in the quarter, and that basically ate into their profit margins or their profit growth. And that is why their shares have fallen in after hours trade. But wait, there's more. I want you to consider this. If you look at the chart of Tesla, you need to know that their shares have fallen under a signal that we look at that tracks momentum. Now, this is the 20-day moving average. Now, this could be a sign that bullish momentum is fading. No surprise, Tesla shares, they're down. As we can see, they're down about 7% from this year's high that we hit of about $470.75. So there you go. So is this a sign of more pullbacks to come for Tesla? Secondly, consider Netflix shares. As we said, they disappointed because their profit margins actually fell in the quarter, even though this, of course, we all know it's the global leader of at-home entertainment. Their operating income rose to $3.24 billion US, but that missed expectations. It was $400 million below forecasts and analyst estimates. So again, this is what is impacting the sentiment of that stock. And I'm painting an overall picture that you can really get a good eye of now. Disappointing results, a disappointing shareholders, I guess, and that's why their shares are falling. Now, also, we've got IBM. Their shares are on the nose as well. But secondly, what's the other major consideration that a potential pullback might be here? Well, some people call it black magic, but Harvard University does not, and that is technical indicators. So when we look at the fundamentals, as in earnings growth of the broad companies that make up the stock market, and secondly, we look at technical indicators, Harvard says that we can have a really good chance of outperforming the market if we combine fundamentals and technicals. Now, why am I taking you on this big, long dance around the sun? Well, the technical indicators, they're giving us warning signs that the market is probably due for a haircut, bit of a trim. We all need a trim every now and then. It doesn't mean that the big fundamentals mean that we're down and out. It just means that the market might be heading down lower. Now, the NASDAQ 100 seems to have hit what we call a double top. Sometimes, but not always. This is a signal that the market is so hot, scorching hot, that it's a bit hard to walk on, a bit like walking on hot sand after a scorching hot day at the beach. That's when you start to walk funny and you eventually trip over. Sometimes you catch yourself before falling into the sand. But now, the last time that the NASDAQ 100 formed what we call the double top was in January this year. And in January this year, guess what happened? The market fell about 24%, but then it recovered and hit a record all-time high. So all we're saying is just be mindful that there is a potential pullback maybe coming. Now, the third potential warning sign of a market pullback is that meme stocks, they're all the rage. They're the most traded here at Moomoo. And what are meme stocks? They're basically companies making little to no profits. Now, their shares typically rally before a broad market pullback. Why am I talking about this? Bear with me. Beyond Meat. They're not really a company that's known for profits, but their shares are up about 560% in 3 days. Holy smokes. Now, this meme-fueled craze obviously was continued after they inked that deal with Walmart. But earlier, of note, we saw this company added to the meme stock ETF MEME. Now, other speculative names are doing really well of late, adding into this hype that I'm talking about or painting a picture of. Krispy Kreme, don't you love their donuts? And you would like their shares too, because they're up 25% in 3 days. Now, we've painted 3 warning signs that you need to be aware of a potential pullback. Now, the caveat is if we get better than expected results next week from the mega companies of the market reporting, Apple, Amazon, Microsoft, Google, Meta. Now, if they report better than expected results, then guess what? Ignore this video, put it in the trash can, and then the market could potentially rally up. But the ominous signs are here of a potential pullback. But many investment analysts believe, look, if if we do see a pullback, the market will probably be higher by the year end, and that'll be a nice present for 31 December. Thomas Lee sees the S&P 500 closing at 7,000 or above 7,000 points at the year end, and that means the market will jump about 4.5% from here, but let's wait and see. Now, that was a big mouthful. Let's just cover the 3 stocks that you need to potentially add to your watch list. Let's kick off with Apple. Apple's market cap a couple of days ago, it almost hit $4 trillion US dollars. It's now at 3.8 trillion US dollars, but can their shares rally next week if they report better than expected results? Well, here are a couple facts. I like to talk in facts. Of course, history doesn't always repeat itself, but it does tend to rhyme. The last 4 quarters, Apple shares have actually fallen after results. So I'll say that again. The last 4 quarters, Apple shares have fallen after reporting results. And this is after they have reported often better than expected results. So that's something for you to consider. Now, I also want you to consider that revenue is expected to surge to $102 billion. That is not a record, but it will be a considerable improvement from the prior quarter. The second stock to add to your watch list is Beach Energy. This is the best performing stock on the ASX so far this week. Monday to Wednesday, the stock is up 11.5%, and probably that's thanks to the rise of oil that we've seen over the past 5 days. Oil is up 2.5%. Another oil company, this one's a bit of a mixed bag of sorts though. They do a lot of work in the oil industry. Now, Halliburton is the best performing stock in the US in the S&P 500 this week. It's up 18%. Now, that's not only because oil prices are up, but because quarterly revenue rose far more than expected. So Halliburton reported stronger than expected profits, or actually their revenue rose to 5.6 billion US dollars, and that was above expectations. But something else that Wall Street really likes is that Halliburton has got a really strong backlog of orders, and they're in new growth areas too, not only thanks to Trump's drill baby drill mantra, but also because they're going into new areas of the market, specifically new power generation deals for data centers. The stock was also upgraded by a couple of analysts, one of those RBC, saying Halliburton should outperform, and they raised their price target. Plenty to consider. Stay safe. Happy trading.